The US bond market can't completely fall apart. Why? Because you can print money and buy it. So that doesn't happen. The currency could weaken, but the rest of the world is even worse. So I'm not sure where this inflation, this mystical, magical, long-term structural, the 70s are coming back when you've got an aging population, you've got low productivity, and you've got an accelerated technological revolution, including AI, plus high debts. It's almost impossible to generate sustained inflation, which is why China can't generate it, Japan can't generate it, Europe can't generate it, and the US can't generate it either.
Since the US Federal Reserve delivered its first rate cut in over 4 years during the September FOMC meeting, there have been talks that the 50 basis point rate cut is a sign of panic from the central bank. Experts have noted that the Federal Reserve has initiated a rate-cutting cycle with a 50 basis point cut only 3 times in recent history, during the dot-com crisis in 2001, the Great Financial Crisis in 2007, and the COVID-19 pandemic in 2020. Each of these situations was followed by severe economic downturns, leading many to believe that the Fed's decision to start with such a significant cut, despite assurances that the economy is stable, signals looming trouble for the U.S. economy. Billionaire investor Chamath Palihapitiya and venture capitalist David Sachs share this concern. They argue that the unexpected 50 basis point cut, rather than the anticipated 25 basis points, indicates that the Fed is bracing for serious challenges ahead. Both warn that Jerome Powell and other FOMC officials may already be in panic mode, though they are attempting to project calm to prevent widespread economic chaos. Chamath and Sachs predict that the Fed will likely announce additional rate cuts before the year ends, and could begin a full-scale money printing cycle as panic intensifies in the coming year. Real Vision CEO Raoul believes otherwise. He is certain that fears of a recession are unfounded as central banks, especially the U.S. Federal Reserve, will not allow their economies to get too hot. They have the sole tool to stop that from happening: the excessive money printing tool they've been unleashing on their respective economies since the Great Financial Crisis. Powell shares his overly bullish and optimistic thesis about the U.S. economy and the global financial markets in a recent interview with the Julia LaRoche Show. As we bring you clips from the interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching and enjoy the video.
Generally speaking, as I said, crypto markets tend to go bananas. So that is, we're talking currently the total market cap of crypto is about $2 trillion. By the end of this cycle, it'll be at 10 to 15 trillion. I mean, that's la land returns. But that's crypto. Crypto gives that kind of opportunity. The Nasdaq's been following this perfectly. So it just keeps going, whether we get another 20%, 50% upside in the Nasdaq, or it could be more. We don't know. You can't really tell. But the point being is the gains are huge. We'll also see commodities picking up. We'll also see, we've seen precious metals picking up. We'll see all parts of the economy and the stocks picking up as the economy's growing. Inflation's not yet a problem. And the central banks are cutting rates and adding liquidity to finance their debts. That's utopia. That's what macro summer and macro fall. It's basically market utopia. There's a large group of people who want their justice. They want the system to fall apart, to say, I told you so. You're printing money. You're creating inflation. You're doing this. It's all unsustainable. And they don't want to see that what's actually happening, this 8% debasement, is basically all of us being charged 8% for a put option on the system, which is actually maybe not that bad, but they don't want to see it. And then a lot of people who aren't invested in technology can't stand the fact that it outperforms versus what was deemed to be the right way to invest, which was the value investor, the cyclical commodity, deep value, that thing. And that's not been working for 30 years, but yet they want it to come back. So they get more angry as markets go, and then they start drawing patterns about how it's going to crash. Well, markets, unlikely to crash unless it's further out the risk curve. But markets don't crash when the business cycle's picking up. They crash when the business cycle is slowing down. And let's say the ISM crosses 50. It never happens at this point of the cycle. So really, there's no real rational argument. And the Fed are cutting rates now. They're pushing liquidity into the system. The market's buoyant, and the ISM is going to start picking up. All the forward-looking indicators are. So it's really difficult to argue that there's a bubble and it's going to pop. And when we get to the bubble argument, something else they miss is they look at price earnings and they say, see, price earnings keep going up there. It's getting wildly expensive. But price and earnings, if you remember the story of your earnings and house prices are always going up more than your earnings. Well, what is price earnings? It's the share price, which is driven by debasement, and corporate earnings, which are driven by GDP growth. So over time, as we add liquidity into the system, the everything code suggests that price earnings will keep going higher because of this dynamic. But people don't understand it. So they look to a world of the past. Now, this has actually all been done before. This is not a brand new thing. After World War II, this is what they did. They used yield curve control as a way of stimulating the economy, and they essentially grew their way out of it by refinancing the debts. And we had exactly the same 4-year cycle back from about 1948 to about 1968. So we had 20 years of it back then.
Powell is certain of more cowbell as he describes the Fed's quantitative easing and money printing cycles, starting in about 10 weeks. A recent post he made on social media platform X reads, "I love the smell of more cowbell in the morning. The everything code is in full play, and this is around the third inning. Remember, markets lag global liquidity by 10 weeks. The new China stimulus doesn't even appear on the chart yet, so this was prior to today's announcement." Powell is also certain about the disruptive powers of artificial intelligence and how completely disruptive technologies like AI, robotics, and energy storage will change the world in the coming years. According to the Real Vision CEO, the coming technological revolution is the solution to the world's massive debt problem. Powell believes all central banks have to do is to keep printing until robots and artificial intelligence can help solve the world's productivity problems. This is why Powell is so overly bullish and optimistic about the global markets, especially cryptocurrencies. Here are more clips from the video.
The evolution was macro made all of the returns in very short periods of time in catastrophic markets. You know, a market like COVID was great for me because I know that playbook, right? You make a lot of returns very fast. But macro is becoming very difficult. There was a few macro opportunities that came since 2012, but not many. After the European debt crisis, what did we have? We had a collapse in the price of oil in 2016, 15. We had a decent rise in the dollar in the middle, and that was about it. But equities outperformed everything, and all the macro guys missed that trend. And this was my work that I did over COVID when I started to think about debasement of currency, and then started to think about the exponential age of technology and where this is going. And you reach the moment, it's like, oh my God, this is all one thing. You know, we have rising markets that's creating more capital, that's flowing into technology, that's driving technology. We've got the fastest pace of technological change in all human history, and the central bank has taken out the big risks to the downside. So suddenly the data tells you to become an optimist. It tells you that we're in secular trends, particularly in tech and crypto. So even though they're volatile, every low is higher than the last. And when you look back, they've outperformed everything, even though you've had that volatility. And you're like, why was I so stupid? You know, really, I could have just bought NASDAQ when I started my career and I'd have done much better. But the narrative is so alluring around the macro collapse. And the fear keeps so many people out of markets. And there's a whole bunch of people on X who've made a whole living out of the fear of collapse. And I know you've been caught up in that in the past. And that fear of collapse stops you investing. It stops you buying a house. And look what happened. Your future self did not thank you, your past self, because you missed it all. And I've done that. You know, I didn't own equities at all. And when I look back, you're like, what, stupid. But I didn't really understand. I didn't really understand what I know today. And now we've got all of these forces working together, this hyper acceleration of technology, global central bank liquidity that's forcing stuff up over time. And then the fact that they've taken away the largest side of the risk of markets, and the inflation bogeyman is just a bogeyman. He just exists in the dark places of your mind because it's very difficult to generate inflation in this world. They will tell you that, well, now the latest story is, well, obviously, every year there's a different story why energy is going to go to $200 a barrel, why it's all going to come to shit, and why inflation is coming back. Every year is a different narrative. Now it's like, well, it's the AI data centers. We're going to run out of electricity. It's going to be infinite demand for power. And oh my God, this is the most inflationary thing. They'll be wrong again, as they've been every single time.
Mm-hmm. Raoul Pal has been talking about an impending macro summer all year long. Pal and other prominent crypto investors and enthusiasts had very high expectations for Bitcoin and other cryptocurrencies at the beginning of the year, especially with this being a halving year and the approval of several spot Bitcoin ETFs by the U.S. Securities and Exchange Commission. Though the price action has not been at par with expectations so far, they believe the time is near, and crypto asset prices will soon take off sharply. However, they stress the importance of being patient and holding on for dear life until the inevitable but often short-lived moment begins. As independent Bitcoin analyst Plan B recently stated in a social media post, only 27 months in the last 13 years generated all Bitcoin gain. Please share your thoughts on Raoul Pal's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.